Welcome and thanks for joining us at EMII.com. I'm Caitlin Sisney with your Capital Markets Report. Today is Tuesday, March 11th, 2008. A consortium of private equity groups has refuted a report that it plans to make a bid for cable operator Virgin Media. A report in the UK's Observer newspaper said Blackstone, Cinven, Kohlberg Kravis Roberts, and Providence Equity were prepared to offer between $6 and $7.5 billion for the company. But a source told Reuters that a bid was not feasible in the current climate and said the consortium, which has been mulling such an offer before the credit crunch, had not worked on the project since June. Private equity firm Carlyle Group made an offer for Virgin Media last year. However, it withdrew soon afterwards following problems in the credit market, sources told Reuters at the time. Staying with capital markets news, EADS wants to identify at least one acquisition in the U.S. this year, according to an internal memo obtained by Reuters. CEO Luis Galios told staff that one of the group's top objectives for 2008 was to propose two acquisition projects in the field of defense, security, or services to the board, at least one of which is in the United States. In the memo, Galias makes delivering on EADS's financial promises and beefing up its industrial performance the group's #1 priority for 2008, as its Airbus unit reels from costly delays to its A380 Super Jumbo. And in capital markets news in Asia, China railway construction shares rose by a smaller than expected 28% after an initial public offering that raised $5.4 billion, reports the Associated Press. Although the IPO was the biggest one so far this year, Bloomberg News reports that it was the worst mainland China trading debut since 2006. The company's shares began trading in Shanghai as the benchmark Shanghai Composite Index slipped 3.6% to its lowest close in 7 months. China railway construction shares hit a high point of 12.18 yuan in early trading, up 34% from the IPO offering price of 9.08 yuan, before closing at 11.64 yuan. The forecast for the IPO had been for a 43% rise. And in other capital markets news in Asia, Hangzhou Wahaha Group, the Chinese drink maker in a trademark dispute with Groupe Danone, said talks to avoid going to court have stalled because of the French company's unreasonable demands, reports Bloomberg News. Danone wants an equal 40% stake with Wahaha in a company merging their venture and disputed non-venture Wahaha units. Zhang said in an interview with Bloomberg at China's annual legislative meeting in Beijing, quote, "They're being unreasonable. Negotiations are not you tell me your agreements and I agree." Danone spokesperson declined to comment. And that rounds out today's Capital Markets Report. Thanks for joining us on EMII.com. For more details on these stories and much more, click on our Capital Markets channel online and read the latest developments.